Welcome to this month's Market Update. I'm joined today by Casey Lowe, Senior Consultant with Frontier Advisors, Capital Markets and Asset Allocation Team. Hi there, Casey.
Wayne.
Lots happening around the world, of course, but let's start today with Australia's major trading partner, which of course is China. What's been happening in China that's caught your eye in recent months?
Yeah, that's a good place to start, Wayne. So broadly speaking, economic growth in China has been weak, and it's been weak for some time now. And the main reason for that is the ongoing COVID-19 policy. So they're still effectively targeting zero COVID cases, which is having a big impact on business activity in China. Of particular interest is the property sector, which has been very weak. If we look at property transactions data for China, if you look at transactions for 2022, it's almost half of what you'd see in usual year in history for China. So pretty weak activity right now in China. For the property sector, there's a number of reasons for this. The first one is the policy environment for the property sector, which the government in China has been tightening for a few years now, and that has had an impact on property developers in terms of their ability to borrow money. So they're facing some cash flow issues for their construction projects. So that has flowed through to concerns from home buyers, where that has led to a reduction in demand for to buy new houses. And in some cases, some home buyers have boycotted their mortgage repayment, so effectively they stopped making payments on the mortgage, which is interesting because the property sector in China is unique in the sense that 80% of home sales are done on a pre-sales basis, meaning that 80% of home sales in China, homes are sold before construction is completed on those houses. So that's something to watch, and it has relevance for us because what happens in the China property sector will have an impact on demand for Australian iron ore.
Yes.
So that's something to watch, but it looks like the government in China is taking notice of this slowdown in the property sector, and they have announced several measures to try to support it. So that's happening there. The other big thing to watch out for in China is that they will be holding their National Communist Party Congress mid-October. So this Congress happens once every 5 years, and it also sets out their plans for the country for the next 5 years. But what they also do at this Congress is they elect the leadership group for the upcoming 5 years, and it's widely expected that Xi Jinping will stay on for unprecedented third term.
Now, central banks around the world are certainly in the spotlight, no different here in Australia with the Reserve Bank. They met recently. Take us through some of the outcomes of their most recent meeting.
So central banks continue to increase interest rates around the world, and the Reserve Bank of Australia, RBA, is no different. What's of interest at this most recent meeting is that the Reserve Bank increased the cash rate by 0.25% rather than...
That's a little bit less than markets were expecting.
Exactly. So the market were expecting 0.5% increase, and we've spoken about this in previous videos where the reasoning for why the Reserve Bank increased it by 0.25% instead of 0.5% is that they acknowledge that the cash rate has increased by a significant amount over the last 6 months, and there's a lag in terms of the impact of the cash rate on the economy. So they just want to slow down the pace of increase to assess the impacts on the wider economy. So the expectation is that the pace of the increase in cash rate will probably slow down from here, but the Reserve Bank have made it clear that they will continue to increase interest rates despite that. So that's has had an impact on market expectations since that meeting. So expectations right now is for the cash rate to finish at around 3% end of this year, and then for the cash rate to peak at around 3.5%
over next year. Some interesting things for us to keep an eye on, Casey. Thank you for that, and thanks for watching this month's Market Update.